The premise of a trade plan and following a trade plan is something that a lot of new traders struggle with. And in tonight's episode of Fallout Shelter, I'm going to take you through a trade plan that I gave away for free and show you how it triggered. I'll go step by step through my direction that I gave. And the reason why I want to talk about this here this evening is because what I noticed, even before the market opened, because MU was the stock that I gave the free trade plan on, a lot of people instantly chimed in because of a massive gap up. They thought it was dead. And then we had someone else that commented, and I'll go through the comments as well. They commented that basically all you're saying is to be patient. No, there's very specific direction in there. So I want to make sure that if I ever were to give a free trade plan away, or maybe you're trying to develop your own trade plans and understand that, maybe that's where you are in your trading career, I want you to know how to follow a trade plan and wait for specific triggers. The word trigger is something that we talk about a lot in triggers and signals that we talk about a lot in day trading and trading in general. But a lot of traders struggle with actually being patient and waiting for that trigger, how to recognize the trigger. And that's something that we're going to be going through this evening. So I'm going to take you through the charts. But before I do that, I just want to talk about why we come up with trade plans. So the reason why we come up with trade plans is to have a plan. We need to be prepared. You can't go into day trading or any type of trading blind. You can't just be clicking buttons. You have to ask yourself the question, like, are you a trader or are you a button clicker? And a lot of people that call themselves traders are in fact button clickers. They're not following a plan. They're blindly jumping in and they're having problems with it. And this is where they're fucking failing. And I don't want that. As an educator and a day trader that has found success, I want to pass this on to people. So I hope people actually pay attention to this video, because after watching this, you're going to know exactly how to draw out a trade plan as well as follow a trade plan. And following the trade plan is even more important. Okay, so let's go over the general trade plan first. So this is a post that I put out on X. And if you're not following me, you're really missing out. Make sure to be following me here on X. It is at Tricktrades1. Find me there. So here's the post. Here's a free tip for you all. Now, please listen and follow these instructions. If SPY and Qs has confirmed weakness tomorrow morning, MU will be a gift. I did a full 30-minute section on this in today's mentoring live class, which I did. Won't go into specifics, but I am going to give you a trade plan. Number one, so these are the directives. There's two scenarios for no matter how the market opens. I always want to make sure that my traders are prepared. So number one, upon gap down, so if it gaps down, meaning below the previous close, where the market closed the previous day, okay, so upon gap down, wait for retracement into PC and 5 EMA. P.C stands for previous close. The 5 EMA daily is an important short-term indicator. And execute the short or put options. So when you're waiting for the retracement, I can draw this out for you and show you basically with the mouse what we're looking for. So if you were to follow my mouse here on the left-hand side of the screen, okay, and I'm drawing a straight line with my mouse. So that's the level. Okay, let's just pretend, and we'll go into this a little more thorough, but just to give you an idea. So this is the level. We start down here and it pops up into that level. We're looking for it to essentially bump its head into that level. That is the retracement. Retracement means retracement. Okay, so directive number two, upon a gap up, that's what happened. Wait for the failure of both the previous close and 5 EMA daily. Do not chase. Wait for the retracement to retest the previous close and 5 EMA. That's where your entry is. So you're waiting for that retracement. Let it fail first, because when we get that slingshot effect, when it dives down real low and it completely fails that level, when it pops back up, it is retesting. Remember, any chart out there, stocks, anything, they're very similar to living, breathing people, humans. And they have to confirm whether something is truly weak or not. Okay, now I could go into a whole Fallout Shelter just on that, just on how I look at these charts, but that's what we're going to say. It needs to confirm. It needs to prove that it is weak. So it will Wait for it. Never chase. Just wait for the proper entry. And you're going to see on the charts exactly what it did over the past 2 days. So when it fails that, wait for it to fail it. I don't care how big that gap up is. Does not matter. Wait for it. So now that we have both of our directives, let's go into the charts. So this is how that big gap up started here, folks. And going back into this, we have people posting. So this is the first one. So this guy writes, basically all you're saying is don't chase. We'll see how this works out. Well, you saw how it worked out, and it worked out flawlessly, and we'll show you on the charts here. But these are very clear directives, very clear trade plans. You are waiting for the failure upon a gap up. Let it fail. Let it break that previous close, and then wait for the execution on the retracement to retest. That's as clear as it gets. This is basic trading language 101. This is stuff that upon the first week of coming into Tricktrades, you're going to know exactly what it is. So I don't know if this is someone that's like extremely new to trading, and I'm not giving this guy a hard time. I know it sounds like I am. I'm really not. Everybody's got to start somewhere. But instead of phrasing a question like that, where it's like, you know, that person is basically on the hunt to find a flaw, and you're basically telling me nothing. If a professional trader that's been doing this for a decade is giving you directives, giving you trade plans, and you look at what he's writing as he's giving you nothing, then you're missing something. That's on you. So instead of phrasing the question like that, maybe ask questions. Maybe ask a follow-up question like, hey, man, I'm not following this. I would love to see how this turns out. Can you be a little more clear or tell me what certain things mean? Hey, man, I'm all for it. That's why I'm here, right? That's why I do these videos. That's why I try and interact with people. But when you phrase a question like that, it's you're putting your own ignorance onto the professional trader. Well, that doesn't make any sense. That's backwards. Let's get our heads out of our asses and let's start asking proper questions and stop treating social media like it's just some nameless, faceless thing. Like that's what people do. When they don't understand something, they attack. And that's not correct. Stop treating social media like there's no repercussions for how you type. It's bullshit. It's a gross way to act, and we have to do better and be better. So start being better and start doing better. Now I want to take you into a post because this is a follow-up. So upon that big gap up, okay, I gave more direction. Remember, this is just a free trade plan, okay? So I said heavy catalyst and strength this morning. Wait for directive number 2. So I even told people, just wait for number 2 on that 2 scenario list. And if not today, the price point will be valid tomorrow. It's still a valid price point. And there's a heavy, heavy reason for this. And again, not going to get into detail with that, but there's a reason. That price point, wait for it. That is the price point. If it retests, it's going to fucking fail. Okay. So on this one here, someone had wrote, I'm confused. Is MU supposed to keep going up or spike down? MU's not supposed to do anything. That's what new traders are missing. And before I get into the answer, I want to explain something to this new trader. So you wrote this before the market even opened. The market hadn't opened yet, right? He wrote this at 7:29 my time. That is 9:29. The market did not open. 1 minute to the market open. So he's watching the play, but now he's confused. And I understand that. You're new to this. You don't have to understand everything. But the way that question is phrased, it's phrased incorrect. And what I'm trying to get traders to do is to start thinking correctly and start rewiring themselves. You start thinking like a professional trader. So number 1, MU is not supposed to do anything. MU can do whatever the hell it wants. It's our job to have trade plans in place so that we know how to navigate these markets. And that's what I've given you. Directive number 2. You were told to wait for directive number 2 in this post, meaning it's still valid. Wait for it to fail the previous close. Don't worry about anything else. You know you have time. It's a massive gap up. Let it fail that previous close. Once it fails that previous close, now you know game is on. Now I need to be watching. Now I need to be waiting for the bounce back up for it to bump its head, right? So just because something gaps up and it's like, oh man, it looks strong. You're really missing the manipulation behind the markets. This is the stuff that they do, that institutions and funds and banks do in order to trap traders. Okay? This is important to understand. So just because it gaps way up and it's like, holy shit, this guy was way off. It's so fucking strong. Oh man, what a joke. And I'm not saying this guy's saying that, but people will read that post and they'll be like, oh fuck, this guy doesn't know what he's talking about. Directive 2 has not triggered yet. Wait for it. That's the trigger. That's the signal. That's what we're waiting for. Okay? So again, be more patient. And that's what I'm telling this guy. And when I wrote this, I wrote back to him later on in the afternoon because this triggered at, I believe, 12:34 in the afternoon market time. It triggered. Wait for it. Things don't need to fit your fucking timeline, nor do they need to fit my fucking timeline. Okay, now I trade the first 1 hour of the market open. Just because it doesn't fit your timeline doesn't mean that that trade plan is dead. Wait for it. Okay, so I wanted to make that all really, really clear. So now let's go into the charts. So MU gaps up huge, right? Like this is a big gap up. It's like, oh man, this is fucking crazy. It gapped way up. Do you see how it failed? Do you see what I was talking about in that post, that MU only wants to come down? There is weakness there. So wait for it. Watch for it. So I have 2 levels here because this level was from today, okay, from our trade plans from today inside chat. This first level is the level that I wanted you guys to watch from that X post, okay? So when it comes down, it slams into that level and it bounces. Yes, that could have been a really nice long. I told my members that. There is a long there, but because of the speed and distance, it's going to bounce. We're not looking for that. I'm looking for the bigger picture play. MU has now stalled. It wants to come down. I'm looking for the big play now. This isn't just a small little day trade I'm after. Now, I'll day trade it, but I'm looking for the big play, okay? That's number 2. You need to know what type of trader you are. I have tons of videos on this. So, comes down and it starts to bump its head back around 12:34 in the afternoon. That's your trigger right there, okay? So your trigger is right in this area. Right there. Okay? Take it. Execute the play. Apply your risk. So remember, just because if it wants to come up a little bit higher doesn't mean that you stop out. You need proper risk strategy in place. And that's a whole nother story. But my members have a risk strategy and they would not get freaked out if it wanted to come up higher. Now, did it sell off a lot? No, it didn't. It doesn't look like much, but this here is from highs to lows, from your trigger to lows on this, you have $1.25 a share. So we trade options. This right here on that play is a big play. And it's hard to tell from this just because of that big gap up, but let's put it more so into perspective if I can get it. This is a big play, okay? So there's your trigger. You could have paid yourself. You could have added back in 2 or 3 more times. You could have played with that chart. Okay, now that takes definitely a little more skill level and you need to trade within your wheelhouse, but you guys get the point. So that on that very first day, provide $1.25 a share. And on options, that's probably close to 50 or 60% return on investment. That is a big trade. Okay, so don't let it fool you. That's a big trade on MU. Now let's move ahead. Now, remember in that post, I said because of the strength, it is still going to be valid tomorrow. Well, today is tomorrow. Let's go into that. And there we go. Look at this beauty. Absolutely fucking beautiful. So here is your level. It failed that level. That's what we're looking for. We're looking for the failure of the previous close and then the retracement. Do you see how beautiful that is? That is absolutely fantastic. When this thing fails, it is a ticking clock. Wait for it. That's your trigger. Your trigger isn't to chase it here. Your trigger is to get it back on the way up on the retracement. Right there. That is your trigger. Boom. That's your trigger, folks. Take it. Be patient with it. Let it come in. See, the problem is on this, traders will pay themselves on this trade, and then it'll come back up and they'll get freaked out. This is proving. It is proving weakness. It isn't just going to test once and completely dump. Do you see when it finally washes out? So on this trade here, you have again, $1.57 a share. And on the options, because it's starting to get later in the week now, you're probably looking at about 100% trade. 100% return on investment. Now, I could be wrong about that, and I want to make that really clear. It could be 50%, it could be 40%, whatever it is. I haven't checked the options chart. But I want you to know, this is the power of options. You get to play stocks that are this clean, this incredibly clean with my strategy. And these are the types of easy peasy type of trades. There's no stress to this trade. Now, I don't want to make this some sort of commercial for Tricktrades. That's not what I'm trying to do here. What I am trying to do is to get people to understand that trade plans, having a trade plan, having directives, no matter, and for the variables in the market is so important. It's mind-blowing how important that is. So you can see that this is an absolutely beautiful day. 2 days in a row off of a free play. Now, it's important for traders also to understand that sometimes these trade plans can fail, right? There's always a way out. Now, people will look at my trade recaps. And remember, I've been doing this a long time, and people have to understand that there's levels to this. And every time I talk about this, I know it can come off like very self-serving and I'm looking for a pat on the back. That's not what I'm doing. But what I am trying to explain to new traders is there are some traders out there, some retail day traders that are extremely good at what they do. And they have a grasp on the markets like not very many people do. Now, I know I have tattoos. I've got a shaved head. I look like an animal. I get that. I understand that. Sometimes looks are very deceiving. I'm extremely good at what I do because I put a lot into this. I treat this like art. This is my craft. And there's nothing that'll stop me from getting better. Day over day, I'm getting better. Week over week, month over month, quarter over quarter, year over year. And I've never stopped that. I've never stopped wanting to grow as a trader, to look for easier, better ways of tweaking my strategy. Now, I've traded the exact same strategy for 10 years. It has not changed. There's tweaks, there's little changes, but it's always remained the same. And you can go back from videos that I have from years ago, man, 7, 8 years ago. And it is the same. It will always be the same. So what I'm trying to tell you is when you're looking at my trade recaps and you're constantly seeing green days and you say to yourself, man, there's no way this guy can be green every day. If you come into the room, if you come into chat and you watch me for a month straight, you're going to see why. Because no matter what the market throws at me, I have a plan for it. A plan. I have a way out of every single situation. I have mentoring live classes where I explain this. I trade live on screen for a select few members. When I'm trading live, that's our momentum course. That is something you have never seen before. That's on a level of trading that is, it's mind-blowing because I know what the market is going to do before it does it. I call it the crystal ball effect, okay? And it's something that I can even teach you. I can teach you how to see that for yourself. I give you all the tools that you need, but it starts with the trade plan. It starts with the trade plan, and it starts with understanding that you need patience to wait for these specific triggers. And I hope this video helps. Adios.